Hi, Todd Pouliot, mygatewaymoney.com is our website, and really got an exciting one today, a little more personal flow chart for you. This is video 28 of our series of workflows and checklists that I put together. But this one's a little more personal for me. If you've read my LinkedIn bio, you know a little bit of the reasons of why I do what I do. But it's about employee stock purchase plans. And the reason why I do what I do is because my family was involved in a plan that went sour. So that's why this is my second video on employee stock purchase plans. And I really hope you enjoy bringing you these educational flow charts. Employee stock purchase plans can be an important benefit for clients. These programs can allow the purchase of an employer stock at discount, which creates an incentive for employees to increase their ownership stake with the employer. The tax impact upon the sale of shares with an employee stock purchase plan varies based on how long the shares were held and at what price they were sold. The tax treatment depends on whether the sale is a qualifying disposition or a disqualifying disposition. This flowchart addresses the tax consequences that you face when participating in an employee stock purchase program and maps tax calculations upon the sale of the employer stock acquired through their plan. And as always, we're going to share our screen here to show you our flow chart. We updated it for 2020, but normally 2022, but this normally doesn't change a whole lot. And ultimately, we're trying to get to these last two boxes here on how the tax treatment is made. So obviously we start, did you sell shares that you purchased under an employee stock purchase plan? Sometimes we just say ESPP. No, obviously there's no tax due. We don't need to talk about this. Believe it or not, we have a lot of people that come to us early on and say, do I have to pay tax on this? If you have not sold any of those shares, the answer is very easy. The answer is no. But if we did, and again, I'm going to take a long route over to the right side. If we did sell, did you hold the share for more than 2 years after the option grant date, start of the offering period, and for more than 1 year after the option exercise date at the end of the offering period? Normally, I will tell you, people get this incorrect a lot. Long-term capital gains, short-term capital gains, 12-month. Remember that it is more than 2 years after the option grant date and more than 1 year after the option exercise date. So did you hold the shares for longer than that? Let's say no. The sale is a disqualifying disposition. Make sure you're cognizant, really aware of those dates, and know that you did it at the right time or not. Otherwise, it will be a disqualifying disposition. You'll pay ordinary income tax on the amount that the share's fair market value on the exercise date or sale date that exceeds the amount you paid for the shares under the option. And did you hold the shares for more than 1 year? Yes. The difference between the disposition price and your cost basis will receive a long-term capital gain or loss treatment. If not, this is where I don't want to be. This is the box I don't want to see. This is where I see a lot of errors. The difference between your disposition price and your cost basis is short-term capital gains treatment. That's a very big error there if it's a tax play. Now, if you've got a company that you don't feel is going to be around, maybe you're willing to let that happen. You're not sure the company has good financial strength. This is an option on the table, so be aware that this can be a good play in the right position. If you're with a long-standing company, great financials, this is certainly not the area that we want to be in. Now, again, we don't know what happens with the market. We've seen the market do some strange things, undervalued some stocks at times. We definitely know this box is here for use, but just be aware that that might be the calculation for the tax purposes. So let's back all the way up. Yes, we did the right thing. We held it for 2 years after the grant date. We held it for a year after the exercise date. And then that sale would be a qualifying disposition. So those are the two main areas where we diverge. And then, was the bargain, the discount you were given by your employer, greater than the profit upon the sale of share at fair market value? If it's yes, you will pay ordinary income tax on the amount the share's fair market value on the disposition date exceeds the amount you paid for the share under the option. Otherwise, if it is not, was the bargain given by your employer greater? So let's say it was less than, you will pay ordinary income tax on the share's full market or fair market value on the option grant date that exceeds the option price. Again, cost base in the share will be adjusted to include the amounts taxed as ordinary income. Again, work with a really good CPA, enrolled agent for your tax preparer. Make sure that they understand employee stock purchase plans. Not your average guy at the corner knows how to handle these and can make errors on your tax return that are very difficult to undo. They can be undone, but it does cost money. And you don't want to do that if you're following these flow charts. And if you hire a really good qualified CPA that is really good in employee stock purchase plans, make sure you have somebody who knows how these work and understand the tax advice that you need. Did your disposition price exceed your cost basis? Hopefully that is the case. This is a good area we'd like to be. And then say yes, your disposition price, the difference, will receive long-term capital gains treatment. That's the area of definitely the box that we want to be in. And if your disposition price did not exceed your cost basis, the difference will receive long-term capital loss treatment. So this is a great flow chart. I love this flow chart. I think it does give you some clarity on what you need to do and what you need to think about. It doesn't tell you should you sell today or should you hold on. It doesn't tell you that. What it tells you or teaches you is, what is the tax? What are the ramifications of what I'm doing? And am I doing the right thing? So we appreciate you coming here. And again, thanks for spending a little time with me on a personal issue that I really feel strongly about. Employee stock purchase plans are wonderful tools. It helps the employer get the buy-in from the employees, and it helps the employees take ownership of their business and makes them feel like an owner, because they own a share of stock in their business. So again, thumbs up. We really appreciate you guys when you smash that thumbs up button. Subscribe, share our videos. We appreciate it, and I hope I'm educating you all out there. And thanks again for being here, and have a great day.